Good evening, everyone, and welcome. I'm Tyler Matheson.
I'm Sue Herrera, filling in tonight for Susie Gareb. Well, there were no records set on Wall Street today as investors did a little profit-taking and sold out of stocks. We'll have more on that in a moment. But we begin tonight with Macy's, the nation's biggest department store chain and an anchor in malls from coast to coast and a shopping staple for most Americans for generations. Shares of the chain ended just a hair lower today after reporting sales fell short of forecasts last quarter due to all that brittle and brutal winter weather and a slow start to spring, even though profits were slightly higher. Courtney Reagan has more on Macy's last quarter results and how confident the retailer is about business in the months ahead.
Macy's turning in a first quarter a little less magical than previous quarters. The department store posting an increase in profit, but disappointing sales. Macy says colder weather and the shift in timing of its friends and family sale had a material impact on the quarter. But on a conference call, the retailer's chief financial officer said year to date, sales are already back well into positive territory. And Macy's believes underlying consumer demand is strong enough to reiterate its earnings forecast. The retailer is also increasing its dividend and stock buyback program. Wells Fargo analyst Paul Lejeune says it's not Macy's best quarter, but it's good enough. Many on Wall Street consider Macy's to be one of the strongest retailers. So today's lackluster results have some worried about what competitors like JCPenney and discounter Walmart will report when earnings are released tomorrow.
You're seeing a choppy backdrop. You're seeing a consumer that last year was hit by a 2% payroll tax. This year has the uncertainty around health care. So I think you're seeing some shifts taking place between, home improvement as well as apparel.
Home was the weakest category in the quarter for Macy's. The company saying the weakness may be related to fewer housing starts and lower new home sales. Those said the trend has improved in early May. It's the improving trends that has Wall Street giving Macy's a pass, at least for now. For Nightly Business Report, I'm Courtney Reagan.
Well, Macy's isn't the only retailer reporting this week. Both Walmart and JCPenney are set to report their first quarter results tomorrow. Bert Flickinger is managing director at Strategic Resource Group, and he joins us now to talk more about his expectations for these retailers. Let's start, though, with a little wrap-up on Macy's, if you don't mind. It has been a darling of Wall Street. Everybody loves Terry Lundgren, deservedly so. Are they going to be able to meet their goals for the rest of the year? Are they sort of best of breed in this space?
Macy's is best of breed, along with Macy's.com. So Macy's is shifting customers from Target, from Penny, from every Bon-Ton, every major retailer in mid-tier, specialty and department stores. So Macy's will continue to win while the rest of retail is really a big cause for concern.
You know, I was surprised with some of the results in the retail space, mostly because there was so much discounting. But that didn't seem to resonate with consumers this time around. Why?
So to your point, it's been desperation discounting now for 7 straight months through the 21 wild winter storms that we had. The consumer's immune to discounting, and the consumer's using his or her mobile devices to find better price points. So they're they're outsmarting the stores and forcing the stores to sell at even lower profit margins than before.
How much did the Target data breach affect consumers? Because it seems like they want to use more cash than they do debit and credit these days.
So you're completely correct. Consumers are moving much more to cash, less to debit, much less to on and offline credit. Target's being hurt the worst, but it's affecting all retailers, particularly apparel and jewelry and accessory retailers that are most dependent on credit.
Let's pivot to what you think or expect from Walmart tomorrow. And I'm going to pick up on the point that you just made, which is, could Target's pain with that data breach be Walmart's gain?
Target's pain is definitely Walmart's gain. Walmart's same-store sales have been negative for over a year. So now you have Walmex and Walmart de Mexico has already reported declining revenue, marginal same-store sales. Walmart U.S., the same-store sales won't be good, but the forecast will be much better than what people expect for 2 reasons. 1, the gain at Target's pain. 2, Coca-Cola with the World Cup coming. 6,000 Walmart stores wired with a proprietary Coca-Cola partnership for every World Cup match that 1 billion viewers will see around in every country, every continent.
You know, we also have the fact that Walmart is moving into less traditional and more niche areas, such as we saw that in the Whole Foods report earlier this week. Walmart's offering more organic, more locally grown, and that's really taking the steam out of some of the niche players in the food business.
Great point. When you look at Whole Foods down 20% in a day, Sprouts, Fresh Market down 20% or more, 40% for the year, with Walmart going shelf stable, with Wild Oats brand bringing it in for natural and organic, and the fresh that you referenced, advantage Walmart, disadvantage to the organic and fresh retailers.
Let's get to two retailers that have had their share of troubles quickly, JCPenney and Sears. How's JCPenney going to do when they come out with their numbers, and finally, is Sears going to survive?
Sears may not survive because it won't get a big enough number for Sears Canada that's reportedly up for sale. As Courtney Reagan referenced a few minutes ago, home was a difficult area for Macy's.
Right.
Penny, to save itself, has to win on home. If Penny can't win on home, it can't win, and it may have to reorganize in a bankruptcy reorg sometime in 2015.
Very interesting, Bert. Fascinating stuff. Stores we all know and use. Bert Flickinger, thank you.
Appreciate teaming up, Tyler.
You bet.